Viewers, traders, and investors. We're here with another midweek update, and today Adam Sarhan joins me. Adam, how are you?
Excellent, James. How are you?
I'm doing very well, thank you. Adam, the market took a big plunge. It started to correct earlier this week, and now it seems to be losing ground again. What's going on out there?
Yeah, I think that's the big topic of the day, the week, and really the month, because we came from extremely overbought conditions, which we outlined on the show over the last several weeks. And we knew the correction or the pullback was coming. It was a matter of when, not if, right? So then we got the pullback, we got the correction, and it came from leading stocks. If you look from last Thursday when the correction began, Tesla, Apple, basically the NASDAQ 100 and a lot of the momentum stocks really got whacked upside their head.
Yeah.
And since then, you had a big sell-off on Thursday, and then Friday. Monday was off for Labor Day, and then Tuesday was down again, and then Wednesday was yesterday, big up day. And then this morning, the ECB came out, which is a European central bank, and said basically there's more money printing, and that futures were lower before that, and then futures shot up, and we had a strong open. But now we're seeing a little bit of selling show up. What does all that mean in context is that the leading areas of the market, James, have been really overbought, overextended, are now pulling back. And concurrently, what's happening is the money's rotating into some of the lagging areas. If you look back to last Thursday, some of the stocks that were up were the stocks that have been lagging, like the cruise lines, the hotels, the travel stocks, so on and so forth. They were actually up last Thursday and last Friday. That tells me that beneath the surface, there's still a lot of money, but it's just taking profits in the very, very hot overbought areas and moving into the undervalued areas.
Sure. Do you think it's safe to interpret the interest in the travel and leisure stocks that were victims of COVID-19 and now seem to be catching a bid? Do you think it's safe to interpret that interest as an expectation on the part of the market that the vacation season that is quickly approaching, sort of in lockstep with flu season, is actually going to be a more of a typical vacation season where people are going to travel and take trips and stay in hotels and go to the south where it's warm? Is that what you think is driving the interest?
I think it's a few things. Number one, there's that. There's also, that's number one. Number two, there's also just enough is enough. I think people have just had enough of this fear-based, oh my God, can't do anything, must stay home, can't take too many rules, can't. I know a guy who's actually a really good longtime friend of mine. He lives in Florida. His parents live in New Jersey, and he hasn't seen his parents since February, and now it's September. And he said, hey, listen, by the way, very smart guy, multimillionaire, very, very successful. I have to go see my parents. And they're older, they're in the risk zone, but he's like, I'm going to go and he's going to jump on a plane. He's leaving tomorrow, Friday at 4 p.m. after the close. And he's going to go and spend the weekend up there in about 10 days or so. Now, he's had enough. And it's not just him. There's countless other people. If you look at, I have other friends that are in the travel industry and they got crushed, no question, but they're starting to see signs of just that extreme pressure just ease a little bit. It's almost like a pressure valve. It's just easy.
Sure.
Does that mean we're coming back to normal? We're going to exceed the old highs? Not anytime soon, but that relief can lead to a very big relief rally on Wall Street. And I think that's what investors are trying to get ahead of.
Mm-hmm. Yeah, certainly the pandemic fatigue and the associated frustration by both consumers of the travel and leisure sector, as well as investors in the sector, I guess, is exerting its effect. I mean, as human beings, we have a limit to how much we can take of any persistent negativity, and that has certainly been the one of the byproducts of the pandemic. Okay, so then, so we've got a little signs of life in the travel and leisure sector. We've got business returning to normal as we approach the fourth quarter of 2020. And so do you think that the sort of position of an investor like our subscribers should be to sort of like view the final quarter as an opportunity to accumulate or establish positions in recovering sectors? Or should they be more defensive? Should they be more aggressive? What do you think they should do?
Yeah, I think what they should do is definitely be optimistic and bullish, because that's what I am at this point in time, and just look at the market and look for two things. Look for continued consolidation in the leading stocks. In other words, those areas of the alpha stocks, the stocks that just have soared over the last 6 months, look for those stocks to pull back and consolidate. And then also look for the undervalued stocks. Think of a ball underwater that just pop. And once you start seeing that those stocks, the undervalued ones that we just outlined, begin to rally, those are good opportunities because that could be a big tectonic shift in where capital is flowing. And just like we saw back in March and the end of March and early April, if you can buy early in the beginning of a new uptrend, that's where the easiest money is to be made. And it's very difficult. It's what I call the hardest trade is that exact trade is what you should be doing it. The easy trades, buying it after it's gone up X%, anyone can do that. And most of the time, those easy trades don't work, as James, you know very well.
Yeah.
And the hard trades are the ones to do. And right now, the hard trade is to buy those undervalued areas or wait for those undervalued areas to get some mojo or get some juice. And then as they start going up to just, to slowly get into them. But I think it'd be definitely optimistic. There's no question. We are heading into the election. Things could change. So that's the caveat there. But until we see any damage show up in the market, this is just a normal and healthy, steep, but a normal and healthy pullback.
Yeah, sure. So what do you make of the action in commodities? I mean, everything's sort of flat along, gold, silver, precious metals, as well as the base metals don't seem to be doing much either.
No, it's just a quiet consolidation. I mean, look at gold. The GLD is a great example. From June all the way up until August, what was the high? August 5th, August 6th, you had a huge move. I mean, almost a parabolic move, right? Almost like Tesla just had over the last few months. And then what happens every single time you have a huge move up or a huge move down? You've got to get a retracement. You got to get a pullback of some sort, right? So in a huge move up, that market pulls back to consolidate the move or it moves sideways. A huge move down, it either rallies back like the relief rally or it moves sideways to consolidate the move. So right now in commodity world, specifically with the metals, we've had a huge move up. Copper as well, same thing, and silver. So it's just consolidating that move, and I think it's basing very well. It's setting up for the next leg higher, as long as the recent lows hold.
So is that your expectation, the commodities segment, the metallic commodities, that they are consolidating in preparation for another move higher?
There's no question.
Okay, so then let's talk about the techs a bit more.
Sure.
Amazon, I saw an interesting headline. Amazon announced that they were going to hire 33,000 people with a $150,000 a year base salary,
Yeah.
and that really caught my attention because that's quite a capital commitment when you look at the operational expense in a year. And yet that hasn't really negatively impacted Amazon's share price at all. I guess it's also a good sign. If you're hiring 33,000 upper level administrators, business must be good.
Well, it's great. I mean, there's no question, James, the new stay-at-home world or COVID world, post-COVID world we live in, that's not even post, but, post-lockdown world we live in, let's put it that way. There are certain just clear beneficiaries of this new environment, this climate. FedEx, UPS, Amazon, Zoom, Teladoc, the list goes on, Fastly, so on and so forth. But Amazon is one of, if not the biggest beneficiary. Look, this morning, I have young kids, they're being homeschooled because the schools are closed and they have to do the online learning, all that kind of fun stuff. Well, okay, fine. Literally this morning, a friend of mine said, hey, when my kids were young, we used to play this game called Math Dice, DICE. I said, oh, well, what is that? He's like, it made my youngest kid fall in love with math. And it's a fun activity you can play, a little competitive, but you play with your kids at a young age, 8 and up, and they have Math Dice Junior for those of you that have younger ones. And it's a great way of engaging them and having a little competition, but teaching them as well in a fun environment. So what was the first thing I did? As he's speaking to me, I'm on Amazon.com, and guess what I just bought? And the Math Dice, and it's going to be delivered tomorrow.
Right.
Now, what else do you have to say, right? It's not just me. I'm sure I'm one, but it's not just me who's doing that. It's an endless amount of people. Almost everybody's now shopping online. I had to go to Best Buy last week to fix my computer. Actually, the one I'm on now, and the monitor, the jack to plug it in was just not working. And I went in there to get into the store. They make you wait outside in these little circles, and there was like 20 people deep, the line. I said, okay, fine. I'm not going to wait. I left. I ran some other errands. I came back, and there was maybe like 10 people deep. I waited in line with 10 people. It went by relatively fast, took about 15 minutes. But I'm waiting outside for 15 minutes doing nothing, zero. And if it wasn't a hardware thing where I just had to get the jack fixed, I would have ordered it online. So think of that. I mean, think about the way people are consuming. So Amazon hiring more people, I think, is very bullish, not just for Amazon, but also for the economy. Because now those 33,000 people have a lot more discretionary income and disposable income. And what are they going to do with it? They're going to spend it.
Right. Do you think that the shift that has been caused by COVID-19, where a lot of people who weren't so comfortable shopping online have now embraced it, a lot of people who weren't so comfortable working from home now love it, except for the fact that they also have to look after their kids while they're at home. Do you think that's a permanent change that's now occurred, or do you think that we will go back to the old ways? I mean, I don't know anybody who's clamoring to get back to the office.
I gotta be honest with you. I thought that was the case early, or also, excuse me, but a lot it depends on the task. So a lot of the jobs where it's analytical and you can think and you kind of want your peace and quiet. If you have an office in your so-called office at work and you have your own little solitude, then they're okay. They're comfortable working from home. But a lot of other people, James, they don't have that luxury and they're more hands-on or they're engaged or they physically can't work from home, which is a big segment of the population, and they're dying to get back to work. So those that can work from home, I think, and they enjoy it, I think there's no question that's going to be a huge, huge shift. I mean, I was just texting my friend this morning. We drop the kids off at school together every day. I mean, so we've been doing it for years, and I drive and we carpool, whatever it is. And I said, it's great to not have any traffic anymore. And he wrote back, ha ha, love it. It just gives you an extra hour, 20 minutes there, 20 minutes back, and unloading the kids and, all that kind of stuff. So it's like a good 45 minutes to an hour, just free time that you can do whatever you want with.
Hmm.
So that's priceless to me, to somebody like me who values their time. And has the luxury, thank Lord, of working from home and being able to use my intellect at work and have that luxury. Others
Mhm.
can't do that.
Right.
So he's a movie producer and he has to go to the set to produce movies. So he can't work from home and he has to go there and physically interact with people. They do the social distancing and stuff, but he's making movies and he's
Right.
doing it now in the middle of this, quarantine, or quasi quarantine, if you will, of
Sure.
course, with all the safety measures in place. But I think the ones that can and like it will do it. The other ones, we are humans and we are social creatures. So we do like that camaraderie or that social impact. Even with you, I'd love to be able to give you a high five every once in a while, right? Not to say, we have a good success, something good happens, pick a good stock, whatever it is, right?
Right.
I think people do have that. And what if you don't have a family and you're solo, you're single, you're by yourself and you have nothing to do and you're just bored all day? That also weighs on someone's mental health a lot.
Oh
So
yeah.
there's a big portion of the population that does want to get back to it.
Yeah. Yeah. The okay, so we've seen a lot of the beneficiaries of the stay-at-home stocks led by Amazon and Zoom make some big moves, Zoom over 300%. Um, do you think that the move is over for these stocks, or do you think that there's still some play there, some game?
I think there's a lot more room left to go because I mean, granted, we've had a massive, massive run, and this is the typical of early stages of a bull market. I've never seen in the history of markets a 3 week or a month long bear market, which happened earlier in 2020. Usually, bear markets are 9 months to 12 months, 18 months, somewhere in that range, if not longer. But we're open to anything that may happen. And if this indeed is the early stages of a bull market, or if that was just a very steep correction within a longer term bull market, either way, we're in a new uptrend. And most new uptrends don't end in 6 months, they last for many, many years. So they do take breaks and they pause and they consolidate for 6 to 12 months in between those moves, which is normal. So if that's the case this time around, and you get a pro, I guess, market victory in November in the US with the elections, and the markets are happy with that outcome, then by all means, you could see much higher prices.
Hmm. Okay. Um, so let's just assume, for the sake of argument, that the virus does sort of start to increase in its infection rate and does, in fact, start to demonstrate more serious health impacts with the onset of flu season. What do you think the chances are that governments are forced to adopt more of an isolation strategy again, a closing down of the economy? I mean, of all the places on earth, the United States is probably the most resistant to the idea of resuming a lockdown mentality to combat the virus. I mean, then we've seen what's happening in Spain, in Australia. Some places have gone back into quarantine slash lockdown because the feeling is that there's no other option. What do you think the chances of that happening in the U.S. economy, the world's biggest economy?
Well, it depends on how bad it gets, right? So I think the chances are low because I think that, like you mentioned earlier, the virus fatigue has just hit a lot of people. But there's also common sense. And if it gets to the point where it's really bad and the numbers are just skyrocketing, like what happened earlier, you want to flatten the curve is just doing that J curve again, then you might have no choice but to shut it down. Also depends what happens. If for whatever reason you get a different sentiment or change, or it hits closer to home within DC and a lot more politicians start getting it, then that could change sentiment very quickly. But as far as the onset of flu season, keep in mind too, James, a lot of the world, well, the whole southern hemisphere, has, while we were in nice summer weather in the north or in the west here, we were fine, North America, but the whole southern hemisphere was in their winter, right, over the summer months. Like July, August, September is cold for them in the southern part of the world. And you saw an uptick in Brazil, for example. You did see an uptick in other parts of the world, but you didn't see a massive, massive, huge move up in the number of cases. That could be a good thing for us as we go into flu season. I know a friend of mine just got sick. He went to get tested just to be sure he was okay. He did have a temperature. Turns out he did not have COVID, but he had pneumonia. So it happens. I mean, these things happen. First thought, everybody thought, oh my God, the guy has COVID, stay away from him, and you can't come close. It doesn't matter what he has. He's still sick. You still want to stay away. So the answer is it all depends on how bad it gets. And that's just yet to be determined.
Mm-hmm. Okay, well, that'll be interesting to see. Now we have some earnings coming up here in the near future. What is your expectation for fourth quarter earnings, third quarter earnings rather?
So I think we're going to see a positive quarter. The expectation from analysts on Wall Street are still relatively low, and we're seeing economic data slowly pick up. We're seeing the earning season that we just finished or we're wrapping up to be relatively positive. I mean, you haven't had a lot of big, I mean, you had a few, but not a lot of big, gap downs or big stocks that imploded after reporting earnings. In fact, you saw a lot more gap ups last quarter, and the market rallied really nicely last quarter.
Yeah, you bet.
So
Okay,
as we go into the fourth quarter, which traditionally is one of the strongest, go ahead.
sorry,
I was going to say I expect a bullish quarter unless if we have any big changes.
okay, great. Adam, we're going to leave it there for now. So
Okay,
thanks for joining me today, and I'll come back to you and see you at the roundtable on Monday. Thanks for
pleasure. Have a great
joining me. Have a
weekend.
great weekend.